And once again, Netflix has an outsized stock market reaction.
Which tends to happen, and the focus tends to be on subscriber numbers.
Yeah.
And indeed, what they showed us in subscriber numbers was a re-acceleration of growth. So interestingly, Netflix has sort of expanded to where they're going to expand to. They've hit the geographies that they're going to get to. Now it's about filling those in, and so that really starts to put the pressure on content. But that growth into those new markets that they announced at CES last week has really sort of reached its ultimate point, or near its ultimate point, with some notable exceptions, is there. And yet there was subscriber growth increasing, and the pace of that is increasing as well.
And that's really key, right? Because content costs are so huge, you need to make that up by subscriber growth.
Well, that's been their business model all along.
So quarter over quarter, total streaming subscriptions up 8%. So the numbers have gone, just think of the progression, like 8 to 9 to 5 to 6, back up to 8. That's pretty good news for these guys because it's a re-acceleration of that growth. And interestingly to me, it did not come at a substantially higher marketing expense. Any company can have as many customers if they want to spend on marketing. These guys still spending a little bit more, 12.8% of revenues were spent on marketing, but that's not a lot more than the percentage rates that they've been sort of averaging the last year or so.
Well, as we mentioned, Netflix tends to have these big reactions to earnings results. Come inside the Bloomberg terminal here for a look at just how we can graph that. It's actually showing you the percent change in Netflix's shares on a day-to-day basis. And pay attention to the instances in which Netflix moves more than 3 standard deviations. That is above the green line, the top green line, or below the bottom red line. Since the end of 2013, yeah, this is a great one. 5 of the 6 stock moves bigger than 3 standard deviations occurred immediately after earnings reports. There's 1, there's 2, there's 3, there's 4, and there's 5. And this latest one, this is the exception here, that's when it moved a lot, but that was on January 5th when Netflix announced its global expansion. And right now, options trading projects a gain or drop of as much as 14% after those results.
I like going inside your Bloomberg terminal, Scarlett. That was fun. Wasn't that fun, Alex? Mm-hmm. So exciting. So look, and I said 12.2% of marketing, of revenues are spent on marketing. Now, Netflix used to keep that number down towards 9 or 10%. So they're spending a lot of money on marketing. The real question, I think the questions in the conference call are going to be all about those content costs and what they are going forward. They don't even tell you in their quarterly report what their future content costs will be. They'll tell you how many hours they're doing. They won't tell you what they're paying for it. So that's going to be a crucial number, both in the 10K when that's eventually filed, and those will be the questions in the call.
Yeah, well, they're very stingy with a lot of information about their original content.
They give a lot of information, but there's a lot that you'd like to know they don't give.